So right now the current SPY option trade is down 37%. Basically it's down $4,754 with 96 cents. So right now it's not looking so good for the trade that I'm currently in right now in SPY. And basically what's going on is that in a way I guess you could say it had to do with the week in a way, but I'm not going to blame the week for this trade going wrong, honestly. I kind of feel what's going on right now is because there's a lot going on with the market. I know there was like a couple of things that were talked about this past week that had to do with like jobs reportings and stuff like that. You know, economic factors, right? That were talked about this past week. And so looking at SPY currently right now, let's see. So basically SPY is currently right now after hours at 579, right? And so basically the strategy is that you try to play SPY call options when it's oversold. So in a way, basically what I was trying to do is I'm basically buying SPY when it's around, you know, let's say it's around this little small support level, right? Around 580, then I'll buy SPY around 580, right? But the way I went around it was basically, let's say, I don't know, right here, right? On the, not on this chart, but, well, let's look at an example, right? For example, on this day, right? I bought some more SPY call options once it regained itself over the 9-day moving average. So let's say, for example, SPY got rejected by the 20-day moving average, right? I basically just waited for SPY to get rejected by the 20-day moving average and see if it could land on a 9-day moving average. That didn't happen, so I bought a couple of SPY call options once it landed on the 9-day moving average. And then I saw that this candle was having a little bit of a little bit of trouble of getting that, like trying its best to not break the 9-day moving average. So basically I got into another couple of SPY call options once it landed precisely on the 9-day moving average. And then once again, you can see that the next candle just completely shattered the 9-day moving average. So basically I just took into account of looking at the overall day's lows. So the support level was around 579. So when I saw SPY, land around that small support level around 579, I got into another couple of call options around 579. And basically that's what I'm doing in a way of when I'm, trading SPY when it's oversold in a way. And I also take into account of looking on the daily chart. So I basically try my best to kind of stick to the daily chart instead of looking at it on the 30-minute time chart. But on that day of Friday, January 10th, right, I just kind of wanted to see where SPY was, at a good out, where was SPY at and where was it at, specifically for entering into a buying opportunity. So in a way I feel like it was all right, but I feel like what will happen with SPY from here, honestly, I mean, nobody really knows. Nobody's an expert of this stuff, but all I can say is that if SPY doesn't bounce off the little small support level around 579 through 580, we could see more downside from SPY. But I don't know how to say it honestly, but to be honest with you, I feel like right now what's going on with SPY is kind of not, how would you say this, I don't think it's bad at all right now, to be honest with you. I feel like right now it is a little like oversold, but I don't know, I just feel like I feel like eventually SPY will regain itself to go up further on, for next month. And then plus these options that I'm currently in, they expire February 14th. So there's plenty of time for these options to turn around until that expiration date, before we approach that expiration date. And so in a way, we will have to see if the strategy of, this aggressive day trading strategy will work or not. So basically, in a way, what the strategy is that basically you, step one, buy SPY call options when it's oversold, specifically by 30 or more, 30, like basically what I'm trying to say is try to buy call options that expire in 30 days or more. And basically step two is to sell out the position once it's up 5 or 10%. And then step three is to try to dollar cost average your options in a way. So let's say your position is down, 20%, right? And then you finally see that your position, right? Let's say SPY is starting to go up, right? So once SPY is starting to go up, right? And let's say your position is now down, instead of being 20%, it's now down 20% because SPY is going up, right? Basically what you want to do is you want to buy another SPY call option or a couple of SPY call options, depending, whatever your account balance is, right? Basically you buy another call option at the 10% level, and basically that way your position, instead of being down 10%, right, when the position is going up, it'll be down now maybe like, maybe 8 or 7%. And basically you kind of want to use the moving averages as your indicator to know when to buy another call option, right? What I mean by that is basically you want to pay attention, right? So let's say you bought your first call option on around 12:30, right? Because you saw there's a small support level around 579 through 578, right? And then let's say you patiently wait, right, for the next candle, the 13 candle to break the 9-day moving average. It happens, right? And so what you want to do, once your position is down, let's say your position here was down 10%, right? And then it starts going up, right? And once it lands on the 9-day moving average, right, basically instead of being down 10% and now you see your position being down 5%, basically you want to buy another call option once the position is down 5%. That way your position, when it starts going up, right, over a certain moving average, your position will be in the green a lot more faster. I don't know how to explain it really. I really suck at explaining. But basically my strategy is I try to use the moving averages as my indicators to either buy more call options or to, just patiently wait and see if I should just play the waiting game and just see like, it's probably going to get rejected. Maybe you should wait until it gets rejected by this moving average first and stuff like that. I don't know how to really explain this, but I'll try. I try my best, honestly. So right now the position is down $4,000. Basically it's almost down $5,000. But am I worried? Not really, because in a way I want to show you guys that trading strategy is not easy. It's not hard either. I just feel like it's just like in a way it's just like you need to be very careful in a way. So that's pretty much it. I'll keep updating you guys to see what happens with this aggressive day trading strategy. So far this might be the first, honestly this might be the first loss in this aggressive day trading strategy. So I'll keep you guys updated, and I'll see you guys in the next video. As always, take care and bye.